According to a class action lawsuit, Silvergate Bank and CEO Alan Lane not only knew of the fraud perpetrated through the FTX and Alameda Research's Silvergate deposit accounts, but the bank substantially helped FTX, Alameda Research, and Sam Bankman-Fried perpetrate that fraud against FTX customers by using its Silvergate Exchange Network, also known as the SEN. A class action lawsuit brought by Soham Bhatia and others against Silvergate Capital and its subsidiary, Silvergate Bank, a La Jolla-based financial institution, was filed on February 14, 2023. The Silvergate Exchange Network is a 24/7, 365-day proprietary payment network developed by Silvergate Bank, designed to facilitate the transfer of US dollars, USD, between Silvergate Bank's customers in real time. Overall, the Silvergate Exchange Network played a crucial role in supporting the infrastructure of the cryptocurrency industry, including FTX, by providing a reliable and efficient payment network for USD transactions. In 2018, Sam Bankman-Fried began building a crypto exchange called FTX, and the crypto exchange began operations in May 2019. Digital currency exchanges, including FTX, were the SEN's largest customers from the beginning, accounting for $729.9 million of the deposits on the SEN, as described in Silvergate's September 30th, 2018 registration statement. Annual SEN transactions grew from $32.7 billion in 2019 to $787.4 billion in 2021, a growth of more than 2,700% in 2 years. By the end of September 2022, the FTX Group's bank deposit alone constituted nearly 10% of the $11.9 billion in deposits, or about $1.2 billion of Silvergate's overall deposit base. Thus, Silvergate had a strong incentive to continue accepting FTX and Alameda Research's customer deposits and executing transfers, because Silvergate's business centered around the adoption of the FTX exchange platform and application. Silvergate also earned income from transaction fees and interest on money deposited in FTX accounts. In fact, before Silvergate went public on November 7, 2019, and before Silvergate attracted FTX as a client, Silvergate had an annual net income of only $7.6 million. By 2021, Silvergate's annual net income had increased to $75.5 million. Silvergate Bank opened numerous accounts for Sam Bankman-Fried's companies, including at least 8 accounts for Alameda Research and related entities, at least 1 account for FTX US and FTX Ventures Limited, at least 4 accounts for FTX Digital Markets, and at least 2 accounts for North Dimension Incorporated. FTX customers wired money to 2 accounts at Silvergate in the name of North Dimension Incorporated, a shell company fully owned by Alameda Research and operated from the same address. North Dimension Incorporated had no legitimate business of its own, and according to the lawsuit, had a sham website that purported to sell electronics. According to the lawsuit, the SEN network enabled FTX and Sam Bankman-Fried to onboard its new customers and to allow existing customers to trade cryptocurrencies. Silvergate Bank and CEO Lane knew that FTX accepted several $1 billion from FTX customers for use in trading on the FTX exchange. However, the funds were not deposited into an FTX account, but in an account in the same name of or associated with Alameda Research. The diversion and commingling of funds unknown to FTX customers was visible to Silvergate and CEO Lane, as Alameda Research and its affiliated accounts amassed deposits through incremental small dollar deposits from FTX customers as FTX's business expanded. According to the lawsuit, the theft of customer funds from FTX accounts occurred in plain sight of CEO Lane and Silvergate, with the bank processing billions in transfers from FTX client accounts to the Alameda Research's accounts. Through its accounts at Silvergate and elsewhere, FTX lent more than half of its $16 billion in customer funds to Alameda Research, including $4 billion in 2022 alone. Not only did the bank continue to allow FTX and Alameda Research to use Silvergate accounts, but they also continue to allow FTX to use Silvergate's proprietary SEN network. On November 11, 2022, FTX and associated companies, including Alameda Research, filed Chapter 11 bankruptcy, the same day that Sam Bankman-Fried stepped down as CEO of FTX. A week after FTX filed for bankruptcy on November 11, 2022, the company revealed in filings that Alameda Research had issued massive loans to multiple executives, including $1 billion sent to Sam Bankman-Fried. The bankruptcy filing includes over 130 companies under the FTX umbrella, as well as the trading firm Alameda Research. According to a presentation released as part of the bankruptcy case on March 2, 2023, $8.9 billion of FTX customer funds remain missing. On December 12, 2022, Sam Bankman-Fried was arrested in the Bahamas. The revelation that FTX had diverted customer money to its accounts at Silvergate Bank prompted a run on Silvergate Bank deposits, leading to Silvergate to record a $1 billion loss and enter voluntary liquidation. Silvergate Capital and its subsidiary Silvergate Bank collapsed on March 8, 2023, a few months after FTX companies filed for bankruptcy on November 11, 2022, and they announced their intent to wind down operations and voluntarily liquidate the bank. On March 3, 2023, Silvergate discontinued the SEN. To date, Silvergate has failed to account for its actions and inactions and role in the failed FTX crypto enterprise, even in response to a demand from the United States Congress. Although it appears that FTX customers will lose substantially all funds invested on the FTX platform, the real tragedy is that 230 Silvergate Bank employees have lost their jobs, with the remaining 80 staff members' jobs to be eliminated after the bank completes its liquidation.
Former Silvergate Bank CEO Alan Lane did not receive jail time. Rather, Mr. Lane agreed to pay a $1 million civil fine and accepted a 5-year ban from serving as an officer or director of any public company. These actions were part of a broader settlement involving Silvergate Capital Corporation, which agreed to pay $63 million in penalties to the SEC, the Federal Reserve Board, and the California Department of Financial Protection and Innovation.
If you enjoyed this video, please hit that subscribe button and ring the bell so you never miss our next video. Drop your thoughts in the comments. Thanks for watching.